what point does the lot loan get paid off? Does that get paid off at the same time when your loan closes, or how does that work, Anish?
Correct. So, once you have the lot loan, then we go back and we take a look at the construction loan. So our construction loans are single close construction loans. So we do have to be in first position, which means we do pay off any loans that happen to be on the lot, including our own lot loan if it's on there. So, let's use round quick numbers, is that you had a $500,000 lot and $500,000 in construction costs. So your total all-in expense is going to be $1 million, $500,000 to buy the lot, $500,000 to build. But in Laura's case, let's say you had a $300,000 mortgage, then we would go up to 80% of that total value with the 500 plus the 500, the $1 million. So that'll give you $800,000 in terms of your brand new mortgage. So that's the new mortgage that's going to go on to the house. Of that 800,000, 300 of it goes straight to pay off the bank. And in this case, it would be US Bank. And then the remaining balance would be used for the construction of the house.
For the construction. Okay. And then that gets obviously dispersed. Now, let me ask you this. I know this is probably not your guys' area of specialty, but like from the time somebody gets the lot loan to the time where they're getting the construction loan, are you guys seeing like a 1 year turnaround, a 2 year turnaround, a 3 year turnaround? I'm imagining it's probably in that 3 year window, since it's that that ARM loan, the 3 year ARM loan. Is there kind of like a certain time frame that you guys see? And I know that it probably varies by city as well too. I know some cities are faster than others, but what would you say a typical turnaround time? Because I get these clients thinking that they're going to build on a house. They buy the piece of land today and they're going to start building tomorrow. And sometimes it's just not realistic, What would you say?
You nailed it in the beginning, though. It's location, location, location. If you're on the coast, you have to deal with the coastal commission. Add in at least an extra year there. I mean, I've seen some clients go 5-6 years, try to get permits in Malibu. But other places I've seen 6 to 8 months, they've gotten their permits because, the city that they're in is a little bit more friendly. I would say in Los Angeles, I would anticipate a year if you're not near the water and you're in an area or community that's a little bit more, there's more housing development going on. So, if you're off a little bit further away, yes, that could take a little bit of time, a little bit longer than a year. Or if it's, in a more natural, like where all other single family homes are, then I would say about a year is what I would anticipate.
Yeah. It's interesting that you say 5 to 6 years, and it does depend on the city, because I was doing a project in Oxnard and it took 3 years. And sometimes you talk to the city and they're like, oh yeah, we'll work with you. We'll make this fast. So what I'd probably recommend is talk to some of the people that are actually doing business in town, like construction people, architects, and get their honest opinion as to how long it's going to take in that city. Because sometimes we get investors from out of the area that they're getting permits in LA in a year. They come down to Camarillo or they come down to Oxnard and they're waiting 3 years, and they get frustrated with the process just because they're used to how their ordinances work. I wanted to ask you, okay, so let's say that we get the lot.
I do want to add one thing to that, one caveat to that, is that we actually can do a purchase construction. Don't do them very often. Haven't done one since I was in San Diego. But when somebody goes to sell the lot, they have the plans and it's ready to go, and they have a contractor. We've got the material list. We actually can do a purchase construction. The thing I have to say on that, that is not a 45-day close. That can take, the last one I did was over 4 months. So, but that is an option. If somebody they want to sell the lot and they've got all their permits and the plans, it's something we can look to do.
So does that mean that the seller has everything ready to go? They find an end buyer that wants to buy it. You guys finance without the finished product being built. And then basically the buyer gets to choose his own finishes on the house. Obviously not the floor plan or anything like that, because that's already set in place. And then you guys finance that and it takes about 4 months. Is that kind of the way that it works?
can't say a specific time period, and I really want to hear also what Anish has to say on this, but I got one today. They called, they already have the permits and the plans, and I said, well, we really need to talk to the realtors, because I need to know that the realtors are going to be patient for this as well, because they still have to find a contractor. They have to, just because you have the permits and plans, you still have to bid it out, have a contractor that's ready and available. So Anish, anything you want to add?
Yeah, I mean, I think where Laura is going with it, you're seeing either twofold. One, you're seeing investors that buy lots and go through the permitting process, and then they determine, you know what, I want to get out of here. I don't want to build it. And then, so you have the plans and permits available, and, you know, someone that doesn't want to deal with the planning and permit, like you said, could take 2-3 years to get. You know, as you go through that process, the value of that lot, of course, increases as you have plans and permits in place. So for some people, they just don't want to build. They're like, you know, they realize, you know what, I already went through this. It was a headache. I just want to get rid of it and be done with it. You have others that are investors, and then they want to sell it. So it's what we call ready to RTI. It's basically ready to shovel. So you have to have plans and permits in place. It cannot, you can't make any alterations to those plan or permits. And if you do, then we have to wait for those alterations to be finalized. But yes, if you find a lot that has approved plans and you're like, that's exactly the type of house I want to build, then yes, going back to what Laura said, we have to have patient realtors and sellers. But, you know, most people would understand in a case like that.
Sounds like a great product, essentially, for the right type of situation, and it sounds like a win-win for everybody. Let's go back to the construction loan happens. Let's say somebody starts building their dream home. Do you guys disperse? Let's go back to that example of 500,000. Do you guys disperse all 500,000 at once, or do you guys so in the stages?
No. So yeah, that could be probably a very big misconception. So we use what we call a fund control company. So as a bank, we actually fund that entire 500,000 in this case to an escrow company. In essence, it's like an escrow company. It's called fund control. So, but state of California might be easier to think of it as an escrow company. They handle all distributions through the builder. So everything is done through the builder, not the borrower. So that's why vetting the builder is extremely important. We have to make sure that there's no history of, you know, lawsuits. They know what they're doing, because in essence, all the funds go to that particular company. So what we do is generally it's a monthly draw. So while you go through the construction loan, we have two really what I call the Bibles. It's our descriptions of material. So it's going to be the descriptions of what you're going to put onto the house. Mm-hmm. And then it's going to be the cost breakdown. So it's breaking down how much are doors, how much are windows, how much is flooring, how much is X, Y, and Z, all the little nuances. Those two things end up being our Bible, and really the Bible for the escrow company, because then what they'll do is they'll look at the sheet and say, okay, you want $20,000 for the doors. Okay. And then they look at the sheet and make sure it corresponds. And then you can get 50% of the materials you can get up front. So as you go to order, you can get 50% of that. So let's say it's $20,000 for doors, you can get $10,000 right away. And most good builders have lines of credit or whatever it is with those companies. So, you know, they're usually okay with taking the 50%, and then the remaining balance gets paid out as the door is actually on the house. So, and then we have an inspector generally go out once a month, and it's usually called we don't have them go out on their own. We have it waited until the builder decides to ask for a draw request. And then from there, it takes about 48 to 72 hours to get him out there, and then another 48 hours to get the wire out to the builder.